The most that any individual can inherit must not enable them to exceed the maximum total wealth. So someone at the minimum wealth level could therefore inherit almost the full maximum wealth amount if it was available to them. But someone with considerable wealth would only be able to inherit the amount that would take them to the maximum wealth level. The underlying principle is that no one can exceed the maximum wealth level under any conditions. Inheritances can be placed within a managed trust for a maximum of 1 year from the date of inheritance. The purpose of this would be to facilitate the reorganization and redistribution of assets if needed. For example, if someone who was already quite wealthy wanted to inherit a property that had been in the family for generations, for example, their family home, but they were already too wealthy in other assets, they could gift some of their other assets to family, friends, charities, or anyone, rather than pay them as taxes. This would bring that receiver of the inheritance under the maximum with enough room to inherit their family property. Each receiver of redistributed wealth would not be able to exceed the maximum income or wealth limit under any circumstances. Note that this scenario would only impact the most extraordinarily wealthy members of society. The complexity of tax laws advantages wealthy individuals. They can afford to pay lawyers to establish complex legal structures and accountants to navigate lengthy tax codes. Poorer individuals cannot do this and often pay higher effective tax rates despite having lower incomes and less wealth. To counteract this problem of unfair tax systems, tax laws must be radically simplified. There must be no tax concessions, subsidies, deductions, or exceptions of any kind allowed. All forms of earned and unearned income count towards annual income. All types of assets must count towards total wealth. Aggregated annual incomes and total wealth are then subjected to the relevant tax brackets and their applicable marginal tax rates. Calculating payable income and wealth taxes becomes a very simple process that no longer provides advantages to wealthy individuals that can afford additional lawyers and accountants, because the tax simplification allows everyone to do the same thing without any loopholes. Changing to a simplified tax regime should happen slowly and in stages. This helps reduce the unintended negative consequences. Subsidies and exceptions must be reduced gradually as programs are enacted to render them redundant or pointless. For example, healthcare deductions are removed once universal public healthcare systems are established. Student concessions are eliminated once all levels of education are available to all. Childcare subsidies are eliminated once childcare services are available to all parents for free. These systems and programs may take decades to establish, depending on the country, but the end goal is to eliminate all tax deductions and subsidies. Even deductions for charity donations must be eventually eliminated entirely. The end goal is a simplified tax code in which annual income and total wealth are straightforward to calculate. Income donations to charity would no longer be tax deductible. Total wealth would be calculated based on remaining assets after donations of wealth to charity, or whoever you want to donate to. The claimed value of the donation must be irrelevant. All that matters is the total value of remaining wealth. This eliminates loopholes used by wealthy individuals to reduce their taxable income. For capital gains, unsold or unrealized gains count towards total wealth. Once assets are sold, then realized gains are counted as income in the year they are sold. This does mean that assets could be taxed twice, but capital gains are not earned through work. The wealth tax thus captures some of the socially created value, such as the increase in property values that result from nearby infrastructure paid for with taxpayer money. Wealth tax rates are much lower, increase very gradually at first, and this issue of double taxation will therefore only impact a minority of the very richest members of society. There is no need to feel bad for them. They will still be the richest members of society. Organizations must not be able to pay for their own assets for personal use by employees. Benefits such as vehicles, homes, accommodation, food, clothing, and personal services or expenses would be, for tax purposes, treated like an equivalent value in income for that employee. Any assets provided for personal use must count towards the total wealth calculation for that individual. The value of benefits and assets would be based on market rates or professional assessments, where market rates aren't available. Organizations must also opt to give employees money to pay for expenditures, in which case they must count towards the income for that employee. These features of tax simplification are necessary to avoid individuals shifting the ownership of assets to hide them inside corporations while using these assets as if they were their own personal property. It also avoids complex pay packages to provide incomes above the maximum allowable income level. The ownership of all assets and capital must be easily linked to specific individuals. Where there are multiple owners, such as shareholders of corporations or beneficiaries of trusts, it must be clear what proportion of assets are owned by everyone. The purpose of making the human owners of all assets transparent is to enable accurate assessments of everyone's income and wealth. It also acts as a check on some types of financial fraud, such as large-scale stock manipulation schemes where more shares are traded than exist in the market. Asset transparency makes tax evasion more difficult and limits the ability of organized crime hiding their illegal gains within legitimate assets. Transparent ownership of assets also enables a clearer picture of the overall economic condition. This reduces uncertainty for financial and economic regulators and makes the outcomes of policy changes more predictable.